Realize that good deals are scarce and understand that that's how you can create value for clients, right? Like you have to do things with your end user in mind. If I want to sell properties to investors, I need to find properties to sell to investors, and I need to create content that creates value for investors. And how do I do that? A lot of agents like doing property tours, right? Like everybody's doing these glamorous houses that are all sexy and whatever, but it's like, why not tour an absolute dump that has, 100K upside as a flip or as a Borr or whatever it is? I mean, nobody's doing this stuff.
Ladies and gentlemen, we are here live with Daniel Foch on the Real Marketer podcast. How are you doing today?
I'm good, man. How are you?
I am not too bad. Apologies for everybody who, I guess, was watching this live. We had a little bit of technical delays, but now we're here and we're ready to go. There's so many things really that I want to dig into. What's interesting is we're repurposing almost an area of your expertise and trying to get over into what I do, which is real estate marketing. So that said, why don't you tell us a little bit about what what you do, your podcast, and your entire world?
Sure. Yeah. So my name's Daniel Foch. I'm a real estate broker by trade. But I work with a lot of developers and investors in kind of like end to end. So like debt, equity, investment sales. And I also work sort of like in a content creation capacity as director of economic research at a relatively new real estate brokerage called Rare Real Estate in Toronto. It's having a big impact on the real estate industry through, I think, just really bringing some innovation to kind of that downline model. And then I also am partners in a mortgage brokerage, a commercial mortgage brokerage that's run by principal mortgage broker by the name of Jonathan Gibson, and we do a lot of, again, investment and development financing. And so I guess like on the content side as well, I host a podcast myself called the Canadian Real Estate Investor Podcast. We're the biggest real estate podcast in Canada. Very fortunate in that respect. And we are, I guess, like a spin-off show of another great show called the Canadian Investor Podcast. They're doing something very similar to what we did. They sort of noticed a gap in the market where, there's a lot of podcasts like the one that you and I are having right now, which is great. A lot of people were just doing it better than we were, which is just interviewing people about specific things. And so we were like, we don't have much to add to that. We don't have much value to add to that space. Right. I think that there's a lot of people already doing it well. And so it's a 2-host show for the most part. We do the audio interview and we basically just riff back and forth about news, educational content. And it's a good contrast because myself and my co-host, Nick Hill, who you should definitely have on here, he's a little bit more bullish than I am, a little bit more optimistic. And then, and I'm a little bit more bearish, and then we're both kind of alternative components in the industry as well. So I'm a broker, real estate broker, and he's a mortgage agent.
Yeah, you guys also have good. You riff off of each other pretty well. Pretty early on, he mentioned he said a dad joke.
Yeah.
Very much a dad joke. It was like showing interest in the interest market.
Yeah.
I think that the way that you handled that was like a fake laugh. You were like, really? Are we lower? We like, that's what we're doing now? And then he just kept on moving, which I don't know. I get it. There was kind of a raw authenticity about the way that you guys interacted that was really refreshing. So I think, as you kind of were mentioning, as I said before, I wanted to repurpose some of your expertise and bring that into my world. So yes, and sounds like you've got a few different ways that you've monetized your podcast. Obviously, you've got different sponsors, but your end goal primarily, with the exception of your work in rare brokerage, right, creating content, but primarily your target demographic are investors. Like those are most of the people that you're actually attracting. And so what I want to do is I want to try to grab your expertise in terms of how you actually attracted these people, as that bring it to the real estate world, meaning the real estate agent world, to talk about how they start working with real estate investors as well, and how that's kind of a scalable model.
Yeah. I mean, I think it's interesting because in Canada, everybody sort of thinks about real estate as an investment or speculative. Like everybody has plays a component in the purchase decision of anyone who consumes real estate. So even if you're buying your primary residence, you don't want to lose money on it, right? You still want it to go up in value. And for the most part, you're doing that because like the economics on a monthly basis of renting are far better than owning, right? So most people would be buying because they need a savings vehicle or they need the value of the home to go up. And so it's not that far off for most realtors to be representing investors. I think most just don't really have the expertise. I think they're thinking more about the speculative nature, prices only go up, et cetera, et cetera. We hear a lot about that philosophy, and not thinking as much about, you know, the nuts and bolts of real estate investing. It's an input and output business, right? So you have one job, which is to sell or to provide your tenant with space, whether it's a residential or commercial tenant, and not lose money in that process. And I think, you know, in the residential space, in the end user space, we've had a lot of people, I guess, suffering as a result of interest rates going up and less and less buyers in the market. Total dollar volume in the real estate market is down about 50 to 60% since this time last year. And so there's a lot less stuff transacting. And as a result of that, realtors have to go to other types of clients to get deals done. And in a lot of cases, that's going to be investors, I would say. Especially, I personally see Canada being in a relatively bad recession in the next 12 months. And so I think that investors will be using that as an opportunistic buying window, right? And so I think, pivoting or trying to integrate representing investors is a great way for most realtors to help weather that downturn a bit.
Yeah, I think that, I mean, obviously you'd know better, but I would assume that the rental market wouldn't really be as affected. Not that it wouldn't be affected, but it wouldn't be as the ownership market, right?
I guess it depends. Like it could be. It depends on how much household consolidation we see. Like if people are, if unemployment rises significantly and people need to cut costs and they go move back in with their parents or something like that. I mean, you could see, but I think immigration in Canada is strong enough. A lot of people talk about how immigration is going to push the housing market up. I would say for the most part, I agree with that, but I think it's a lot less direct than most people think. Like, you know, in Las Vegas, population was growing by 3.5% and prices were falling. So, you know, at the same time, you can see similar things happening during 2008 bubble in the US. So, you know, immigration doesn't exist in a vacuum. People still need money right. and so interest rates play a big role, and the economy plays a big role, and wages play a big role, and jobs play a big role. And so the rental market shouldn't be impacted, and I would imagine it probably won't be. That's sort of where the floor is drawn in the housing market in Canada, which is that more and more immigrants, more and more non-permanent residents, those are people who rent properties, and as a result, they they kind of drive the price up through the income portion of a property value.
So I want to, I guess, preface that I think one of the reasons that it's so important, because like I mentioned, I'm kind of going out of the wheelhouse a little bit to talk about what's actually happening in the real estate market from an interest rate perspective. My entire agenda here on this podcast is to have real estate agents that were listening to this find of helping their actual clientele, or to, I guess, build a new clientele. And that's where I think having a finger on the pulse of what's actually happening in the market will be absolutely invaluable to any agents actually listening to this. So to anybody listening and wondering kind of why we're getting into this, everything that we're about to discuss is going to be ammunition for you to find a new way to add to add more value and a different type of value to a different type of clientele. And I think understanding what's actually happening in this market is going to be super valuable for you. And it's also it's an exciting opportunity. Because instead of dealing with first-time home buyers or just dealing with listings or sellers or buyers, there's still going to be a market for that. As affected as it might be, there will still be a market for that. But I think to tap into a market that will be benefited almost by what's happening in the market, that's where this really becomes exciting. Where I think we'll kind of keel over and just say, like, that's it, I'm done. The market's changed. The agents who look forward and say, how can I change my approach? How can I differentiate myself and build a new marketing strategy? those are the agents that succeed. And anytime there's a challenge, what I want to look at is where is the opportunity? Because every challenge comes with an opportunity. And you mentioned that the fact that the interest rates are going in the way that they are and the market is changing as it is, there is going to be a market if there isn't yet opportunistic investors. So can you talk a little bit about that?
Sure. I think that, most people and most people who want to invest in Canadian real estate or in the Greater Toronto area, let's use that as an example, which like something like 50% of capital that moves in Canadian real estate happens in the Greater Golden Horseshoe. So, you have a high concentration of money in property in the GTA or in the Greater Golden Horseshoe. You can't make deals make sense you can't buy a duplex in Toronto and cash flow it. And so as prices come down, which is typically would happen in a rising rate economy, they've been a little sticky. They did drop obviously pretty heavily from January of last year to January, February, spring of last year to spring of this year. But then they ran up again in this spring. But what happens is you have, like we just discussed it, you have rents, you have a rising rent environment, and then you have a decreasing price environment. The only question mark is whether or not interest rates are going to change. And so I think there becomes this window of opportunity when prices have moved down and the economy is suffering and you're starting to see good deals and rates have sort of either stopped moving up or have started coming down a little bit in an effort to recover the Canadian economy, which I think is going to be necessary in 6 to 12 months time. As that whole thing takes place, that's when I think you're going to start to see investors looking at the market opportunistically. They're going to say rates are getting lower. The economy is not going to get any worse than it is right now. Rents are rising because we're in an inflationary environment. And I think this is a good time to buy or to make a real estate investment. Because there is an element of market timing to everything. And I would say, like, I don't encourage people to try and time the market, but the element of market timing is that you'll buy when the deal makes sense. And right now deals don't make sense, but I would say that there's going to be a window of opportunity again. Whereas if prices come down and if rates come down a little bit, again, rates, like I don't even try and forecast that stuff, but I think that's going to be a couple years out, obviously. I would say probably 2 quarters after the government admits that we're in a recession is when we'll start to see interest rates come down. But when all of those stars align, investors will be re-entering the market. And so I think realtors ought to be prepared because investors are going to be the most active purchasers during that period of time when a lot of other people are really just struggling to make ends meet. And I think that a lot of people are just struggling to make ends meet as it is right now. Inflation is exceptionally high. Cost of living is exceptionally high. Wages are not keeping up. People are putting more and more money into just servicing their mortgages, right? That's how a recession happens. That's what a recession feels like. So on the other side of this is when you start to see activity ramp up again.
You used an interesting word when you said when the Canadian government admits that they're in a recession. There's something behind there. Can you dig into that?
Sure. Yeah. So, if you look at the last 2 quarters of economic growth, they were both, Q4 of 2020 was 0% GDP growth, which is, when adjusted for inflation, is a negative GDP growth. And Q1 of this year was, I want to say 3%, in the 3% range GDP growth, and against 4% inflation. Again, adjusted for inflation, that's a real recession. So you now have 2 quarters of real GDP contraction. GDP in Canada looks great because it's being inflated by inflation, right? The cost of stuff is going up. And so GDP in total is going up. And so what is going to be needed for Canada to make this admission, I guess I call it, is we actually need to see 2 quarters of nominal GDP growth decline, which means you need GDP to decline for 2 quarters for them to say, oh, we're in a recession, right? And also rising unemployment and whatever. And I actually think it's the policy objective of the Bank of Canada now at this point to put us in recession. I think that they don't, there's no other way that they can get inflation down to the neutral zone.
Other than putting us in recession.
Yeah, I mean, recession has a 100% success rate of getting inflation down to the neutral range.
Okay, so let me just kind of break this down then. So you're talking to a lay person, right? For all intents and purposes in this. So recession starts, right? Every cost of everything goes down. And then the window of opportunity for investors is as the recession is going on, obviously the market's going to be going a lot slower. And then things will kind of start to course correct a little bit. Interest rates will start to normalize again. And slowly but surely, the people who are buying houses and getting into the market will catch up as well. And that sort of in between stage when the interest rates corrects itself, but also right before the market starts to heat up again, that's really the window of opportunity for investors.
Yeah, I mean, I don't know if I necessarily see. So to answer your question, yes, but I don't know if I necessarily see a kind of heating up again phase of this whole thing. Like, I really do think that the setup to what's happening in Canadian real estate right now is almost identical to what happened in the early 1990s. 1989, we saw record population growth. It was the last time we saw population growth over 1.8%. We broke that for the first time last year. We saw a rate hiking cycle. We saw house prices peak. We saw them run up in the double digits for 2 years in a row in the late 80s. You saw a recession as a result of an oil price shock. And remember, that was really the big theme last year. Was the oil price shock was what was pushing more and more inflation, and so to me, the setup is very similar. So let's think about what happened from 89 till the mid 90s. House prices peaked in 1989. They dropped very quickly into 1990, and then they ran up again, actually, which we just saw happen right now. Big drop and then a run up, and then they dropped again, not as severely, but they dropped again, another 5%, and then they slowly grinded down and maybe another 2 to 5%, depending on the market, for the next like 3 years. So the market was like, I would call that a sideways market, but technically it's down, right? That could be a likely outcome. And then what happened during that period of time is it all sounds very similar. In the late 80s, early 90s, people were flipping paper. There was this big speculation crisis. This is where you started seeing taxation being put on the assignment sales. People were signing pre-construction contracts on detached houses all over the suburbs and GTA. I mean, literally everything was the same. Like, it was almost identical. And so what happened was everybody was speculating on real estate 89, 90, and then a bunch of people got absolutely decimated, right? Like, a lot of people, everybody knew someone who lost their shirt to the real estate market in the early 90s. And so, but by the mid 90s, everyone was like, no, we're not touching that. And this is why it's hard to find a baby boomer in present day who's interested in investing in real estate, right? A lot of them are afraid of the asset class. And the reason is because they saw what happened as a result of speculative real estate investing, not real estate investing or yield-based real estate investing. And then it took a long time for that market to ramp back up on the price side. So again, if you're buying for price, I would say now is not the right time. I would say never is really the right time. But it took until 2002 for nominal house prices to get back to what they were at the 1989 peak. So 13-year recovery. If you adjust that for inflation, it took until 2012. And again, the big reason from my perspective is there was no consumer sentiment. People weren't lining up to buy real estate in 1994, 1995. They were afraid of it. And I think in order for this cycle to happen properly, that's what needs to be the ultimate outcome, is people need to be afraid of the asset class again. They need to stop having an unhealthy relationship with housing. We need to get rid of commoditization. We need to get rid of financialization of housing. People who are investing in real estate need to realize that they're in the business of providing units, space, housing, or commercial units to a customer. And we're not there yet, right? When we are, I think that's the signal.
So that would be as opposed to kind of just churning these out and almost treating it like it's capitalistic.
Yeah, or it would be like, to me, it's just, I mean, not so much churning it out, but like, I think just people buying with the objective of just hoarding houses, and realizing that it's a scarce asset or scarce good, and that they just want to keep it because it's going to go up in value because it's scarce. I think they need to destroy that. The central bank does, right? Like, to me, like, they're watching very closely right now what's happening is with the economy. They see house prices ripping in the spring market. They see the job market, running strong. if the central bank's work isn't even close to done yet.
Yeah. So I want to also talk about something that you mentioned earlier on is that you mentioned that you don't want to suggest anybody try to quote unquote time the market. But I think timing the market almost as a day trader is different than understanding that foundationally speaking, the S&P 500 is going to increase because that's just what it does. Real estate market is going to increase because that's just what it does. So understanding, I guess, the trends that you've kind of what happens with the market and the interest rates and what their relationships are with each other. Would you say that trying to time the market from a perspective of let's wait for it to start coming back into the market and let's wait for the interest rates to start normalizing again? If you were to hypothetically try to time that, would you see that more akin to day trading timing the market, or timing the market from a healthy perspective of it just goes up in value? That's just what it does.
I mean, to me, they're one and the same, right? Like the only argument against like if you're trying to get in at a discounted price, right? Like the thing with real estate that makes it a little bit different from day trading, for example, is that you also have to time interest rates because your capital, like, you know, you just buy $1 million house at a 5.5% interest rate today, you're paying $250,000 in interest over the first 5 years of your mortgage term. Like interest rates play just as big of a component as price. And so I think, you know, timing when you get your mortgage is just as important. I think that the remaining component of it is income as well, right? So if you're buying a dividend stock, you might not care as much about, you want to buy it as soon as possible when you're talking about the S&P 500, right? Or anything with yield, because you just want to collect those dividends between now and whatever the heck the price is at the point, or you're independent of the price because you're a dividend investor. Real estate ought to be the same thing, right? So, you know, today I would buy it sooner, and like I still feel like there's a lot of downside risk in the market, and I spend more time researching this than anybody that I know, and I would still never try and time the market. And if I think that if I buy a property last week and I think it's going to drop 10% in value, and I have no idea when it's going to do that, but I still think there's probably 10% downside left in the market. I can't put a timeline on it, but I also know that it'll make me 10% per year for the next 2 years, right? So it's like, would I give up the opportunity to make 20%, a 20% ROI over the next 2 years guaranteed, just because I think that there's a potential loss of 10%, not even a realized loss because it's not yield, right? But I think there's a potential loss ahead at some point over the next little bit of negative 10% from price. And so if you're doing investing right and you're doing it for a yield, it doesn't really matter, right? The market kind of times itself. When it presents you with an opportunity where you can actually make money, where you can earn your dividend, if we're using this example, then you just do it. You just execute, right? Because the sooner the better. Every month that goes by where you're collecting that income is a month where you won.
Right. Okay, so now let's take a step back here, right? So let's pretend you were a residential realtor who happened to be knew a freakish amount about real estate investing in the Canadian market. And let's pretend it's actually happening. Let's pretend all of a sudden everybody stopped buying, right? And interest rates were up. It's hard for you to sell the only product really that you're qualified to sell. You want to start getting into the interest market. The challenge is, and I wanted to maybe get a little bit interpersonal here for a second, understanding the psychology of investors. For a new residential realtor to start trying to attract big time investors and say me, it's really hard to break into that market, I anticipate, right? No matter really how much, as I think, especially when it comes to real estate investing, everybody has their person. So it's as much, you know, if not more than what you know. Let's say you were to start trying to break into the investors market as things started to transition, which they are. What would you do? What would be the first thing that you'd do?
I think my primary piece of advice for people would be to realize that good deals are scarce, and understand that that's how you can create value for clients, right? Like you have to do things with your end user in mind. So, you know, if I want to sell properties to investors, then I need to find properties to sell to investors, and I need to create content that creates value for investors. And how do I do that? I mean, there's a number of different ways that you can do it, right? You could, but you could go, and a lot of agents like doing property tours, right? Like everybody's doing these glamorous houses that are all sexy and whatever, but it's like, why not tour an absolute dump that has, 100K upside as a flip or as a Borr or whatever it is. I mean, nobody's doing this stuff. I would do it if I had the time. I just don't have the time anymore. I mean, I figured out a way to make content for my desktop that works. But so that would, like, to me, and it's funny because like I train realtors on how to work with investors. Like that's part of what I do at Rare. I just did a seminar today with my group on just like, a lot of people were trying to answer the same question that you're asking me. Like, what's the first step? If I'm a residential realtor, and I get approached by an investor and they want to work with me because they like me, we have a good relationship, we have good, whatever it is, our characters match, but I have no clue what I'm doing. So out of my league with this. Where do I start? Right. You can control that narrative. Like nobody's going to, if somebody's going to be disrespectful towards you for asking questions, then, there's probably not it's good riddance if you end up that relationship. So I'd start by asking them the right questions, right? And this is like, and you can do this with content too, right? If we're thinking about it from a marketing perspective, I told everybody on that call, make an Instagram story, figure out a way to divide your audience into two people, make an Instagram story that says, do you invest for cash flow? Or do you want to invest in real estate for cash flow or capital appreciation? And it's a poll. And now all these poll results, you literally have a data point for, whoever answered that is looking for cash flow. You now have a list of people who are interested in cash flow real estate, and whoever answered for capital appreciation, you now have a list of people who are interested in buying for capital appreciation or flipping or whatever it is. Like make the poll and sort your audience into different people. Like use the tools that we have. Like everybody's spending all their time on it on social media anyway. Use the tools that it gives you to create value for your audience and yourself at the same time.
That's such an interesting idea in house tours of I guess those dumps and figuring out or discussing on like live during a video what the opportunity actually is. And it's interesting that nobody is doing that because it is a simple idea and it has been done in different manifestations so many times. I saw something that I thought was really interesting. It was an Instagram channel where a guy compares European castles, as he says, to Toronto real estate markets. And he shows like a tiny house for like, let's say $2.2 million. And it is like the most rundown piece of crap. And then he'll show a castle in the middle of like Luxembourg or whatever. And it's just ridiculous. And I thought that was also a really interesting take where almost in a tongue-in-cheek way, he's making fun of the real estate market. Mm-hmm. So I think he's a realtor. But I think that sort of taking that, and I don't think that you were talking about of the dumps was meant to be done in a tongue-in-cheek way, or it could be, or maybe it be. But I think that also, as you mentioned, just get those insights from the people that you're looking to get into. Either speak with agents or people like yourself and say, what do they want? And then figure out ways to actually provide that value.
Yeah, for sure.
So, okay. So now that, let's say I understand, I guess I've done my research. I've spoken to work with investors. Maybe I've even shadowed agents that have worked with investors. I've created the content for them. Is it just a matter of creating content, putting it out there and waiting for the leads to start coming in? Like, how do I actively go out and start prospecting to these people?
I mean, if you're using the example that I just did, like I do these surveys on a monthly basis just to check in with my audience, right? So I have an Instagram story and it says like, do you think prices are going to go up? Yes or no? Or like, are you in present day, you decide you want to invest. Are you investing for cash flow? Are you investing for capital appreciation? Or, present day, what would be your budget to spend on a real estate investment? And I'm sorting my audience, right? I can see now in the data points from those polls who everyone is. And I have a list and I just write it down on a piece of paper or make a little database from that. And I will just because I know, like, so Instagram probably being one of the best places for this. I know that I have them there, right? And so I will literally just DM them links to deals that come up that fit that criteria, right? Like that's how you activate it. And if you do a poll, like you're going to get 100 responses, I would say, for the most part. Like I have a big audience and I get hundreds and hundreds of these. Like I think for the average realtor's social media platform, they're going to get a lot of responses. So you should have, like, there's a client in there, right? Statistically, 1 out of 100 is going to be a client. So
yeah,
that's it. You just got to find out what people are looking for and do it in a fun way. Like, don't just be, everyone's like, oh, like, think about like real estate 5 years ago or 10 years ago. And it was like, oh, you need to be having conversations with, was it 21 people a day about real estate? You know what I mean? Like, that was what you needed to do. You needed to cold call 21 people or whatever it was, door knock 21 people, or go to some networking thing and meet 21 people to statistically make like $250,000 a year income or whatever it was. You have the opportunity to do this now on your phone without ever leaving your house or your desk or picking up the phone or calling anybody, by inviting the conversation to you. So just use content to invite the conversation to you. That's it.
And I think that it really starts with very acutely intimately understanding what your avatar is. That's the word I like to use, what your avatar actually wants. I think that where this falls short with people is they ask want the answer to for their own purposes without thinking about whether or not anybody cares about any question. So it's like, for example, it's like, ask me any question about real estate investing and I'll answer it. Like, not many people would answer that question, but if you get super simple and you think about what kind of question would I want to answer, if you're scrolling on Instagram, I like a soccer fan, you see who's better, Ronaldo or Messi. If you know and like soccer at all, answer that question, because it's super easy. It's I have a quick opinion. I don't really have to justify it. Bam, and there's your answer. So I think that if people are trying to ask a question when it comes to the real estate market, let's say, to say like, do you think that the interest rates will rise past this point to this point, and why? That might be a more difficult question to answer than do you think that it's going to get better or worse from here? And then you just say better or worse. I think that as long as from a point of what do they actually want, and then how can you gear everything that you're doing towards providing them what they actually want. And I think the reality is the concept stays the same, whether or not you're trying to break into the first-time home buyer market, residential. It's just figure out who they are, what they want, and give that to them. Exact same strategies apply when it comes to investors. I think the only difference being is like it's a different group of people, right? Because obviously a lot of people do they do purchase based off of emotion. Investors are not really different. However, there's a lot less emotion involved. I think the bit of that, though, however, is, as you mentioned, send them properties that are a good opportunity. And as long as you understand what a good opportunity is, as long as the numbers fit, you've got content that you're absolutely sure will be beneficial for the people that you're trying to attract. Because within, they don't really need like a white picket fence and this and that. They just need to know, can I make me money? Can I provide maybe to some good tenants or not? If it fits that criteria, it's a good piece of content, and it's as simple as that.
Yeah. And I think, a lot of people like they make assumptions about their audience and what's valuable to anyone, right? So whereas like you have an opportunity to ask your audience what's valuable, like you go look at like the lean business model canvas or lean startup ideology, right? That they say you should be constantly market validating your product. Well, as a realtor, like, your product is you, right? So market validate that at all times. Figure out what the market wants from you. Like, what do people want? Ask them what content they want. Do they want to see a bunch of like tear down houses? You tour a bunch of tear down houses in a funny way that, I mean, there's a lot of people who probably hate my content, a lot of people, right? But they would resonate exceptionally well with other people. And like, this is the thing about being in a qualitative business, and where it's all about personalities. You're giving somebody the opportunity to build a relationship with you without actually having to do the work of building a relationship with you, being face to face with them.
Yeah.
And in that process, like, ask them what they're looking for, right? If it's investors, like, ask, here's a list of 4 different investment strategies, right? You can flip a property, you can buy and hold a property and rent it out, you can Airbnb a property. Among all those things, which one interests you most and then start making content for the one that has the highest amount. Literally that you have the majority of your audience, or the biggest portion of your audience, is interested in Airbnbs, as an example. Okay, start making content. And your audience is market validating itself in real time for you. Like, where else, when in history have you ever had the opportunity to do this before? And people aren't even taking advantage of it.
Yeah. And even to take it a step farther, even if it's not necessarily as actively as asking, what do you want to see? When you create a piece of content that does really well, and like, okay, I'm onto something here. So people look at a piece of content that doesn't necessarily go viral as if it didn't work out and as if it failed. But it's not like it didn't work out and their chats. They told you something. You were just told if you are going to dedicate the next 6 months of your life to exactly like this, it may not necessarily work out. So kind of change course a little bit, adjust the way that you create intent. And yeah, you can ask polls and everything like that, look at the stats. But I think that understanding that when something doesn't work out, it is working out because it's just telling you maybe veer away from here and veer towards there. And just like when it comes to a poll, should I do A, right? Should I talk about fix and flips, or should I talk about Airbnbs or whatever that is? If everybody says Airbnbs, for example, that doesn't mean that like, oh shoot, it didn't work for fix and flips. That just means, okay, so then don't talk about that. Go talk about this. And I think that looking at it very pragmatically is a great approach, and it's about simplifying it and just listening to the people.
The other part is like conversion, right? So, you know, like you use the example of like a piece of content that went viral versus a piece of content that didn't. I mean, in a lot of cases, like content that goes viral is like very much a waste of time. It's really just like it's a dopamine hit, right? Like for like, I love it. It feels great to get 1 million views on a video, but it usually gets 1 million views because it's an absolute wasteland of controversial, you know, divisive comments in the thread that serve no value to anybody who's participating in the dialogue. Whereas I get and like that, like those pieces of content, my pieces of content that have hit in the millions of views, they do not get me deals, right, at all. Like if anything, they get me further away from deals because people look at it and they're like, I have no idea what's going on. Like these comments are crazy. Like there's something wrong here. I'm gonna stay away from this guy, right? Whereas, you know, the smaller stuff where you're actually engaging more intimately with the audience, maybe you ask them a question that they hadn't really thought about and they answer it honestly in the comments, and you can have a really good discussion there, and you're enabling these dialogues, these important dialogues that get people from not being your client to being your client, or not buying real estate to buying real estate, or whatever, not selling real estate to selling real estate. It's all about activation, right? It's all about getting the audience to engage with you, to build this relationship. It's not about being famous. Like, you know, you want to be famous, like you doing dumb stuff, like, you know, like throwing chairs off of balconies in Toronto. Like that girl was famous instantly, right? Like, you know, that's not what most people, I think they want that, but they don't.
Yeah.
You know.
All right. So before we kind of conclude this, could you tell us a little bit about Rare, the brokerage, as well as how people could join your team and what that would look like?
Yeah. So, I mean, Rare is really interesting in the respect that, like, I think a lot of brokerages in present day try and sell the same thing, right? Oh, we train people well. Oh, it's a community. Oh, it's all that stuff. I mean, everything in this brokerage is for us and by us, right? So we create training for one another. We uplift one another. We're creating content systems for one another. It's really like within the industry, the only place that I've seen that exists as a truly collective and collaborative workspace. And real estate can be very much a lonely business, right? And so I think having a space like that where people support one another and help one another grow as real estate professionals, rather than competing or saying that we're going to do all these things, is good. And I think that, you know, I mean, they're obviously doing things exceptionally well on the branding side, by comparison to competitors in the downline space, I would say, and really resonating well with the audience that creates content in real estate. And so, yeah.
So if somebody were to, I know you mentioned other brokerages, so I'm not going to say EXP because when you think downline, that's the first thing you think of.
Right.
To EXP, everybody you're joining, they have their value add, they have their coaching, their programs, whatever it may be. It's the same thing in Rare, and you having the experience that you have both in creating content in the real estate investing space, obviously having the biggest Canadian real estate podcast. Joining your downline, I'm sure there's a bunch of unique value adds that you can provide. Can you tell us a little bit about what they are?
Sure. Yeah. I mean, I'm doing weekly calls with everybody that we work with, and we're really content focused, and we're helping people niche down. So like we're building out a platform for somebody who wants to specialize in missing middle housing in the city of Toronto, as an example, right now, right? Helping people geographically specialize with their investment focused content. You know, a lot of analytical stuff. We curate content and send it out on a regular basis. So like 2 big news articles came out today as an example from the Office of Superintendent of Financial Institutions, or OSFI, which is a big bank regulator. So they are forcing CIBC to do remedial action, and they are also increasing the cash requirement for all Canadian banks to 3.5%. I mean, I had those in those articles. That to me is like a piece of content where it's a race, right? If you're one of the first 10 people to release a good commentary on that piece of content, that piece of content is going to blow up, and it's going to get you followers who are going to get you closer to becoming, or who are going to get closer to becoming clients of yours in the fullness of time. And so curation is exceptionally important, and speed to market is exceptionally important with news. So those are a couple of the things. The other piece is like, we have a coast to coast network of buyers, and I can't service all of them. Like I get several messages a day from people who want to invest in real estate in, Northern Ontario or Saskatoon or Saskatchewan, or Alberta. We send those leads out to people that are on the team, right? That are on the downline. I think the final piece of, it's really an advantage is infancy, right? Like the whole idea of downline, right, I guess is that you want to get in early, really. I mean, EXP is kind of like plateaued on the share price and size, right? Like, and I think that happening at the same time that the market's going to be contracting in size for realtors is a little bit ominous to be entering that right now.
All right. So if somebody, one more question also, is this specifically, is this exclusive for Toronto, or can somebody in the world, or just Canada?
Anywhere. Yeah. I mean, we're primarily in the Toronto market right now, but we're going to be releasing a coast to coast platform very shortly.
Okay. So if something to this, let's say in Pennsylvania, they would also be able to join your team.
Yep.
Okay. Awesome, man. And then lastly is, how do people get in touch with you, and how can they find your podcast?
Yeah, if you just search my name, Daniel Foch, Foch, Google should give you the most likely platform that you're going to click on. My name's very unique, so should give you what you're looking for. And then if you're a podcaster, if you're listening to this on a podcast platform, just search the Canadian Real Estate Investor podcast. Very self-descriptive title, great for SEO. And yeah, we'd love to have you. Always happy to have new listeners.
Okay, thank you so much, Daniel, for your time. Really do appreciate it.
Thank you. Appreciate the opportunity.